We are covering the Terrorism Risk Insurance Act, or TRIA, a critical topic on the property and casualty exam. Think of TRIA not as an insurance policy itself, but as a government-run reinsurance program that acts as a financial backstop for insurance companies. It was created after the September 11th attacks to ensure that commercial insurance would remain available and affordable, even with the threat of large-scale terrorism. The most tested concept is what actually triggers TRIA, and that is a certified act of terrorism. An exam question might ask who certifies an act of terrorism for TRIA to apply. The answer is the Secretary of the Treasury in concurrence with the Secretary of State and the Attorney General. It is not the President or FEMA. For an event to be certified, it must be a violent act, dangerous to human life or property, and cause aggregate property and casualty insurance losses of more than $5 million. For the federal backstop to kick in, total industry-wide losses must exceed a much higher program trigger, currently $200 million. On the exam, you will see questions about how this coverage is provided. Insurers are required to offer terrorism coverage on their commercial policies. The key words are must offer. The business owner, however, can choose to reject this coverage to save on their premium. Expect a question like, under TRIA, an insurer must, and the correct answer will involve making terrorism coverage available to commercial policyholders. This is why you constantly see terrorism mentioned in commercial property forms. Standard policies often have an exclusion for terrorism. By offering TRIA coverage, the insurer provides a way to buy back that coverage. If a question describes a commercial building damaged in a terrorist attack, the first thing you need to determine is whether the insured accepted the TRIA coverage that their insurer was required to offer. A common exam trap is to confuse TRIA with personal lines. TRIA applies to commercial lines only, such as commercial property, general liability, and workers' compensation. It does not apply to a homeowner's or personal auto policy. Another trick is wording that implies any act of terrorism is covered. Remember, it must be a certified act. If the Secretary of the Treasury doesn't certify it, TRIA doesn't apply, and the policy's specific language and exclusions will dictate coverage. Here's a simple phrase to remember who certifies an act. To trigger TRIA, the Treasury leads the team. This helps you recall that the Secretary of the Treasury has the primary role in certification. Once an act is certified and the triggers are met, the federal government shares the cost with insurers. Each insurer first has to pay a deductible, which is 20% of their prior year's direct earned premiums for covered lines. After the deductible is met, the government covers a majority share of the remaining losses, currently 80%, and the insurer covers the other 20%. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.